That's one of the most popular stocks for younger investors, people just now getting into the game. GoPro. It's one of the most traded stocks actually on Robinhood in their top 10. I think it's fair to do a little earnings report analysis on this company, right? So they reported earnings after hours yesterday, so it's a little bit late, just a day late. And obviously the stock as a result was up 2% during the normal trading session today. Now, the market was up at that rate too, so it wasn't anything too crazy. As you saw from the start of the morning, it was kind of crazy to start up quite a bit pre-market, then sank down pretty far, and then it kind of returned to normal levels around 2% up, so nothing crazy here. So GoPro, if you don't know, they are an action camera company. Obviously, I mean, you know what a GoPro is for the most part. You probably do, but action cameras are a market that is pretty interesting to look at into the future, because it's as more people get into social media influence, action cams are pretty important for that. But let's just take a look at GoPro's earnings here. Quarter one non-GAAP EPS of negative 34 cents, in line. Really? GAAP EPS of negative 43 cents, beat by 1 cent. Holy crap. Well, that is quite an ugly profit line right there, I must say. Revenue on this company, 119%, 119.4 million, down 50.8% year over year. What? Down 50% year over year, and that was what was projected. That is what I would call crazy. Again, GoPro, in my opinion, it's a garbage stock to be involved with. I think it's fair to say it's a garbage stock. Now, they have the chance to turn around, but when we think about GoPro and the action camera sector, really anyone could go in. GoPro is just a very well-known name, but anyone really could get involved in this sector. And if they did, I don't know if GoPro would be lasting. So, it's crazy. So, GoPro disclosed an EBITDA of negative 41 million for the quarter versus negative 1 million a year ago. Oh, gosh. That's wild. I think that's crazy. They increased their loss quite a bit, and it's not like most of the times when you see companies increasing loss, you see the revenue grow as well, but you just don't see that with this company. But GoPro's Plus subscription service ended quarter one with 355,000 paid subscribers, up 14% quarter over quarter and 69% year over year. Now, that's a good aspect, but it makes you think about where the actual camera market itself went. If they're down on revenue 50%, what the crap happened to the cameras? I mean, clearly they didn't sell that many, and we'll get into the earnings presentation and take a look at it. So, we've taken decisive action to transition into a more efficient and profitable direct-to-consumer business, says CEO. Seems like you might step down, buddy. But let's take a look at these earnings and see what we have to say. So here's a good thing to look at is camera units shipped. And this is what I meant. And this is in thousands. So 341,000 camera units shipped this quarter. Compare that to a year ago quarter 1, 2019. They shipped 840,000. So that's where you see the difference. So the subscription, GoPro subscription, yes, you saw raise up. But this is the worst quarter that they've had for camera shipments in 2 years by a large margin. That's not a good sign. I don't know how this stock, it's already been hammered hard, but I don't know how it's not hammered worse. The revenue line is the worst they've seen in 2 years as well. It's not a good trend for this company. I can tell you that right now. If we look at net loss, they're kind of going every other quarter they're reporting net loss. So it's not the end of the world, but net loss of $50 million. Not the most beautiful thing you've ever seen. Negative 50 million is just not. It's not a beautiful one. I got to be honest, but they've had worse. If that means anything, I don't think it does, but it's definitely one of the worst in the past 2 years. It's the second worst in the past 2 years. So you don't like to see that aspect of it, but it's just crazy. I don't know. Headcount of the company kind of decreasing too. It's just, I don't know what to say for this company. It looks like it's not good. I mean, it's so off and on. Things don't look that great. That's all I could tell you. For revenue by channel, You see off the direct and distribution percentage. Direct is taking a little bit higher percentage of the total revenue than it has previously. But total revenue, just that line is just an ugly total revenue line. And you see overall, as far as the segments, it's pretty well similar in terms of that. I mean, there's nothing too crazy to point out in terms of revenue by geography, really. Nothing too crazy. They're going to talk about balance sheet metrics, but we're not going to look at that because that's just way too consolidated. We'll look at the legitimate balance sheet for this company so we can actually talk about what's going on here. So I don't know if they're going to mention it on this. They won't, but we'll go back and just look at their 10Q. And off their 10Q, we'll be able to find exactly what we need. Okay, once it loads, we're going to get to that consolidated balance sheet, and we can look at this company and see what they have to offer me. So this is a company right now with total current assets of, let's see, is this in thousands? Yeah, so 372 million in total current assets. That was versus a number of, oh my gosh, that was against a 535 million number last quarter. Whew. Last quarter, in terms of total assets, they had 792 million. Now this quarter they had 623 million. So questionable there as far as that decrease. You see a decrease of around $170 billion. That's a big decrease. But we can look at the liabilities and see if something changed there. So overall, they did pay off some debt, as you can see. So total current liabilities of 214 million versus 327 million last quarter. So they did pay off some debt. So that leaves a total liabilities of 445 million versus a 559 million number last quarter. So overall, asset-wise, they have 177 million more in terms of assets than they do liabilities. But this is such a developed company. It seems crazy that that's all that balance sheet has. And again, it's not the world's ugliest balance sheet because technically there's stockholder equity where it's not, stockholder deficit, thankfully. So they have more assets than they do liabilities, but it's just not beautiful. I fail to see really the upside in the stock right now. I really do. If they're going to post a number like that, this next quarter could be hit potentially worse, all things considered. If people are locked down, they're not going to need action cameras because they're not going to be out. Maybe normal cameras I could see so they could vlog their daily life, but not everyone's going to get a GoPro for that. For the most part, they're going to get a normal camera so they can do their own videos, stuff like that. I don't see the upside in this company right now. I hate to say it, but it's one of the most highly traded stocks. I wish it was not one of the most highly traded stocks on Robinhood because first off, we can talk about the disaster that this company was. First off, nightmare situation since IPO. I mean, 2014, this thing reached a high of over $90 a share. Since then, down 96%. But even in recent history, we're talking about, we just go 2019 to 2020. Let's look the past year. In the past year, this thing's down 54%. And this is the time in which you went to, any other stock. What's a fair stock to even look at right now? It is a relatively boring stock even. iRobot here, and in the last year, definitely has been hit hard as well. But again, this is one that's been hit by, trade war, everything right now, down 33% only. And let's not even get into my boy Facebook here, right? If you look at Facebook, in the past year, this is a stock that's doing it as it should be, up 12%. I just don't see the upside right here for I don't see the upside for GoPro stock, in my opinion. I get why you might like it, but it's cheap. Just don't let that fool you. This isn't really a company worth trading right now, in my opinion. The only time I could see doing anything with this company potentially is really options trading. It's the only way you could really make money out of this, but you just never know. Again, it's a horrific quarter, yet they still posted a positive increase today. So you just don't know how things are going to be. But regardless, I hope you enjoyed this.